Welcome everyone to this my inaugural Gold and Silver Weekly Report. My name is Mike Pennington, and I intend to provide you with some insight into both the gold and silver markets, what's driving them, and where they might go in both the short term and the long term. Personally, I have been trading gold and silver now for just about 20 years, and so I hope I can provide you with some meaningful commentary and predictions. Yes, I'm also a bullion dealer, and my firm, Penco Coin and Bullion, is an active trader in bullion coins and bars and rounds and all other precious metals. But now let's get down to business. This past Sunday, on August the 30th, I issued only my second buy recommendation this year on the precious metals. It's been my position all year this year that the stock market would have a good summer and then reverse at the start of September. And during that same period, I saw gold and silver trading sideways during the summer with a lot of volatility, which we've seen, but basically churning sideways. And then beginning on September 1st until the year end, I see gold establishing an all-time high, with silver returning to the $20 per ounce level also before the end of the year. I say this based on several important factors. Some of these factors are based on the strength of the metals themselves, while others are based on the weakness of the US dollar. Taken individually, any one of these factors could propel gold and silver much higher. But when you combine all of these factors together, then I think you'll agree with me and we'll find an upward momentum that will be difficult to stop. First, regarding gold and silver. Over the course of the last month, gold has traded in a narrow range between 935 and 965. This band or flag formation, from a technical standpoint, is getting wound more tight every day and is therefore indicative of a major breakout coming very soon, either up or down. I believe that the breakout will be to the upside for several reasons. First, we have to take into consideration that September is by far gold's best month of the year. The gold price has risen 16 of the past 20 years. And most of those years, we've seen a fairly significant rise in the price of gold. And then looking down the road a bit, the fourth quarter is likewise gold's best quarter of the year. And so I see the price breaking out in early September of this current flag formation that I was talking about before. I see it breaking out to the upside and then building on that momentum through the fourth quarter and finishing the year very strong indeed. Now, in addition to this seasonality issue, we have to look at the demand and the supply for both gold and silver because they are very strong. Let's look at gold demand for a minute. Now we see where central banks around the globe are suddenly net buyers of gold instead of the net sellers that they have been for the past several years. This is especially true for the BRIC nations, that is Brazil, Russia, India, and China. China itself has been busy diversifying out of dollars, and they have been adding to their gold reserves at a rapid rate throughout this entire year. And I expect that trend to continue for several more years at least. In addition, let's consider investor demand for a minute. Investor demand for gold has been soaring. In fact, every major mint around the world right now is having a very difficult time keeping up with investor demand. In fact, just recently, the U.S. Mint has had to curtail production of some of its most popular coins due to a lack of metal blanks. They don't have enough metal to produce these coins. And the story is very much the same for silver. Silver supply is way down and silver demand is way up. There too, especially the investor demand. But in addition to investor demand, there is a big difference with silver, and that is that silver is a very important commodity used in the production of various critical commercial products. And so the fundamentals for both the precious metals, gold and silver, they've never looked better than at the current time. And recent activity in both gold and silver looks pretty strong. And sure, we see them every week, it seems like, one day or another, where they get slammed down very hard and very quick. And this is mostly through the efforts of the bullion banks, who are typically short gold, and it's through their efforts that these bullion banks slam the price of the price of the metals down a lot more. And so the difference now, however, is that each of these slam downs is seen as a buying opportunity by the investing public and also by the central banks out there. And what we see now is that the price bounces back very quickly, and that's different than what we've seen in the most recent years. So all of these factors combined, they build a very strong case for higher metal prices on the horizon. But that's not all. We have to do a quick examination of the dollar. And when we do that, it adds a lot more fuel to the fire. For quite some time, gold prices move inversely to the direction of the dollar. And so if the dollar moves down, then we see gold moving up in most cases, and vice versa. Not all the time, but most of the time. In my opinion, I don't think this relationship will last forever. I think it may end fairly soon. But now it's a good rule of thumb. I'm sure most of you are aware that the United States has been printing dollars at an unprecedented rate. And when this happens, the value of the dollar collapses. Since 1986, the dollar has lost almost half of its value. And coupled with the fact that personal income has been pretty flat, then I don't have to tell you that we're all having to spend a lot more money just to sustain our existing standard of living. And this is probably only going to get worse. And this is the reason why the Chinese, too, are so concerned, and why they've held several meetings with our Treasury Secretary, Timothy Geithner, and others in the high financial circles of our government, because they're concerned since they hold several trillion of our dollars, which they look at as they continue to decline in value. And so the bottom line here, my friends, is that everyone should own some gold or some silver to protect both their purchasing power and the value of their existing assets. And I say this right now, especially because the timing is perfect. It's never been better. And I don't care whether you buy from me or some other bullion dealer, that's fine. But don't delay. Add some gold and silver. And if you haven't bought any at all, please buy some now. And if you have, it's a great time to add to your inventory. You know, the question seems to me, why should someone pay $400 or $500 a year for a gold and silver newsletter when you'll be able to receive the same basic information right here in the future for free? And in addition, if anyone wants to discuss any of these thoughts with me personally, just want you to know that I am available at the phone number or the email that is shown on the last page following the presentation. So I just want to say goodbye for now. Thank you for joining me, and please remember to join us next Tuesday night at 7 p.m. Pacific time. Thank you.